It's only entertainment.
Welcome back to the Talking Hedge. I'm Josh Kincaid, capital markets analyst and host of your Cannabis Business Podcast. With me is Michael O'Neill. He's a cannabis banker. Michael's got over 20 years of experience in the banking industry, including serving as an executive, compliance officer, auditor, consultant, and federal regulator. Michael, thanks for being on the Talking Hedge.
Hey, thanks so much for having me, Josh. Great to be here today.
I appreciate it. So kind of jumping into everything that is banking, especially cannabis related. Let's knock the easy one out, low hanging fruit with lack of access to banking. How has that really, from your perspective, affected or impacted the cannabis industry, not having traditional banking services?
Well, I think, when I first started this back in 2014, shortly after FinCEN issued the guidance to be able to bank cannabis-related businesses, that from the aspect, the access has literally grown. I think the latest FinCEN report says there's over 800 banks and credit unions that are there. I sort of take a little different approach on it there, Josh, from I believe there is access to banking, basic banking, maybe not full service banking, but unfortunately, people don't want to pay for the cost that goes into that because it is such an intensive program to bank this particular industry vertical. And on top of that, it is costly to be able to do so.
And is that because there's a lot of compliance and due diligence and oversight and it's laborious? Because people just think, oh, there's high overhead, but just make it work. But what makes it expensive?
Well, I think, it's, as I always try to tell everybody, Josh, it's BSA. It's simple BSA, but it's BSA on elephant steroids. That's sort of my term for it.
That's the Bank Secrecy Act, right?
Yeah. I mean, the Bank Secrecy Act, but I think you also have, it's not just BSA. It falls into the compliance pieces that you have to look at on normal compliance. Or from the standpoint, not your rules if you're doing electronic transfers or accepting electronic payments into the system. It's not just a compliance function. That is your main function, I do believe. But on top of that, you're having to, it's the onboarding process. It's that, okay, are these folks that we want to have within our bank? And then it's the constant monitoring that has to go on, the reporting process that goes into that. I was at the Safe Harbor program for almost 4 years. I was the BSA officer there. And also on top of that, I was the senior executive over the day-to-day operations of the program. And, we had during my time, I went through 9 different examinations by the NCUA and the state at the same time, approximately every 90 to 120 days. So, I mean, when it was first starting, they were very on top of it. And on top of that, I think, some of the things that in normal banking where we would be able to take deposits in, for a long time, the regulators were not allowing you to actually put those, at least on the credit union side, were not allowing you to use those deposits for normal banking activities that you would have used. So we had to stay 100% liquid as part of that. So we were literally transferring tens of millions of dollars on the last business day of the month to get those balances off of our bank, those deposits off of our balance sheet. But going back to it, it's just so expensive. And I'll quote my old CEO, Sunday Seafried, cannabis bankers don't grow on trees. Me, I started out when I didn't have a clue. Somebody just asked me, Michael, can you do this? And I'm like, sure I can. And, absolutely, we were able to get it done at the first program that I was part of. But it goes into the number of people, and it's also, are you doing it manually, or do you have an automation? Do you have internal automation that you developed yourself? Are you paying someone else? So there's all these different pieces of the puzzle that you have to look at that brings into the cost, which makes it very expensive to do. But I also know that I was part of 6 different companies here in Colorado that went from just small operations to now publicly traded companies. And I know they wouldn't have been able to do that without the facilitation of banking.
At this point, do you think that the loans and credit aspect are the biggest challenge?
I think there's still some things that are coming up, because how should I say, I built a program here recently over the last couple of years, which I'm no longer part of at this point, and for a bank out of the Midwest. And we were able to build a program that focused on lending first. And but it goes back to that true and tried commercial methodology that you're looking there. Are you cash flow positive? Are you making net income? Do you have do you have real estate to be able to pledge for that? And, but I believe that lending will come even more so, particularly if we get the Safer Bank Act that comes through, that will have a little bit more facilitation for that. But yes, I do believe that. But I also believe that one of the constraints in lending right now is there are so many people that, you've got a lot of loans that are coming due, whether they're private or, they're actually through a bank, that, and the industry is suffering from such a downturn in the sales and profitability that we're having, that's also leading into lenders not wanting to get involved, because where I think a lot of people, when it was early investments, a lot of private dollars that were going in, they were looking at it from, here's what our presumptions are, our performers are, when we're looking out into the future. And I don't think people are looking at that anymore. You have to be a company that's literally, you've got to be making a profit. You've got to have real estate to put up there for collateral. You've got to have the cash flow. You've got to have that debt servicing ratio that meets the criteria for so many banks that are now in that space.
So I want to kind of transition to how to reduce some of the burden on everybody. Reduce the risk, reduce the hassle, reduce the fees. And wondering if technology is the solution to that. Artificial intelligence is out there. You got ChatGPT at your fingertips. I used it to come up with a couple of slogans that you probably don't want to use, but here they are. ChatGPT gave you a couple, banking slogans that said your financial partner in crime. It's supposed to be a joke. There's also
it's true.
growing green, banking green. Pretty cheesy. But so what role does artificial intelligence and technology play in enhancing maybe the efficiency or security or risk or otherwise? Where does technology play, and how is artificial intelligence going to shape the future of cannabis banking?
Well, I think when we have looked at some of the information that I've read and dug into for AI, the AI is not perfected yet. I mean, you have to go back and look at some of there's so many pieces in there. You've got, it can pass the medical exam, or it can pass the the bar, by itself, just knowing what it is, but also going back, but looking at it, some of the information in there is incorrect. So I think there's some perfection there. But I think AI and machine learning has already been a part of AML, BSA software systems. I mean, that they are sitting there. You've got Verifin. It has a functionality that learns. It looks at the data and it continues to look at that. I think that, yes, definitely, software, technology is going to be bringing the price point down, because you don't have to do it manually. So therefore you can handle more accounts per banker versus a smaller number in a banker's portfolio if you were doing it manually and those sort of things. But I think, the bottom line is that technology is always going to be the riser when we look at economics. I mean, any technological innovation is going to improve the economics that you're going to have. But going back to the BSA and the AML rules are still going to be the same.
That's anti-money laundering for those that don't know. AML.
Sorry. Sorry, I'm used to
sorry.
From the standpoint, but I think, you're still going to have that human component that analyze the data at the bottom, at the very end of the product, because it might be AI doesn't have that intuition. I once again, one of my CEOs used to say, listen to that gut. It's 15,000 generations of genetics that's telling you something. And it comes from a time when we weren't at the top of the food chain. So for the standpoint, as modern humans, we sometimes ignore that. So it's a very good skill for someone within the anti-money laundering space to be able to have.
Mm-hmm. Yeah, there's plenty of hippies out there that can resonate with that, myself included.
Yeah.
So the trends in the industry I'm seeing right now from finance is definitely pulling money back. Ever since the Ukraine issue, there's been a lot of investors really kind of holding onto money even tighter, making things a lot more challenging. We're seeing some consolidation as a result of that playing out in the um, in the cultivation and manufacturing, are mostly retail, I would say, which is weird because most of the grows weren't moving all of that much. But this, for some reason, maybe it's this rescheduling and people wanting that opportunity to get in. Um, those are the kind of things that I'm seeing, as well as the debt side was more popular because equity prices were just plummeting. They don't really move individual. They move with the news, and so unfortunately, a lot of ETFs like the Poseidon PSDN ETF failed because it was unable to really move independently of the market. And so those are all kind of trends that I'm seeing from your standpoint, cannabis banking or otherwise. What trends are you seeing in cannabis?
Well, I think my personal perspective, and then shared by quite a few of my colleagues, is, I think a lot of people were counting on legalization to come in sometime in 2022. And there was a lot, particularly here in Colorado, there was a large expansion of grow facilities, manufacturing facilities, with that mindset that legalization was possibly coming. And then, but we continue to have expansion of the marketplace. And what I mean by that is, in 2014, we had 2 states, and now we have, over 40 that have some sort of medical and or recreational, industry within those. So I think you're not having, like here in Colorado, we're not seeing that tourist driven information. It's just not, it's not the thrill that you used to have. But there's also just been prices that keep plummeting. And I think that's also part of the illegal market in California, the illicit market in Oklahoma, that we're seeing so many of those things. I was reading an article recently about products being, California products showing up in stores in New York City and
And Mexico.
yeah. So, I mean, I didn't know Mexico, but I mean, in New York City, in non-licensed dispensaries. So we still have that big black market out there that's happened there. But going back to the investments, I think a lot of people saw this as a growth market. And, they were willing to do some crazy things. I mean, I looked at some of the, some of the buys that have been going on out there going, oh my God, where do you come up with those evaluations? I went to a very fancy private business school, but they didn't teach me how to do those evaluations. I mean, this was just, so I mean, but as you and I are seeing, but we're seeing a consolidation within the market because I think people expanded way too quick. Where I want certain groups that are just very focused on what they're doing and where they're going, and their expansion footprints are making a difference with their profitability. Where others was, how much can I gobble up and how much money can I get? Because with those obscene valuations and people giving you that money, you didn't have people that were watching their expenses and how much, running an effective company. And now you're having to watch people. In fact, I had this conversation at Bazinga a few weeks ago with my first ever banking client here in Colorado. And I was telling him, I said, look, you got three choices. You're either going to find money, that you're going to be able to do your expansion. You're either going to sell, and if you sell, if you find the money, it's going to be, the value you're going to get probably isn't going to match what you think you're going to do. You're going to sell, and you're going to get a lesser price than you would have just because of what's going on in the marketplace. I said, or maybe it's time to entrench. And entrench mean, he goes, well, we've got, 100, almost 200 employees. I'm like, that should be the last place you're looking to cut costs. From my perspective, you should be going, where can I find those internal costs? Because if I have to look that person in the eye and lay them off, I want to know that I honestly looked at something, I looked at all aspects before I came to that. And I think that's where a lot of companies are right now. And I think people that do have the cash flow and or the ability to find that financing are going to find some heck of some deals right now. I've got an old client down in Arizona, just picked up 5 stores for less than what he would have paid for a single store 3 years ago. So, I mean, finding those opportunities, I think very well-run companies and companies that, once again, they might not be making a profit, but having that positive cash flow that they can sit there and make sure that they are funding their operation. And this particular client in Arizona paid cash for everything. So they actually had the money on the books to be able to do that. So I think consolidation is still going to be something, Josh, that is coming in the future. And we're going to see bigger and bigger pieces. Let's see what happens with Safer Banking Act. Descheduling. I'm less
Yeah,
positive
so
about that.
let's jump into that one, because I think
Sure.
rescheduling is going to bring in a lot more FOMO and people that may have been on the sidelines. If they reschedule to a 3 and it brings some life back in for those that kind of just threw in the towel, now they might be reevaluating that, or they just might be so bitter they're just over it. I don't know. But having said that, what do you think that some potential changes could occur if we were to go to a Schedule 3? Where do you foresee the industry evolving from there?
The first thing is, I think a lot of people are going to kick themselves in the backside for giving up their medical licenses. How's that?
Mm.
Because all of a sudden, we talk about Schedule 3, that's still not available over the counter. Okay, so how do we get to the point dealing with the adult or recreational market? How will that actually affect that marketplace? If that's it, but then again, we're not dealing with a Schedule 1 drug anymore, and particularly 280E comes into play, obviously, from the standpoint, but once again, does that 280E equate over to, it's for Schedule 1 drugs. So theoretically, you would be able to see the profitability pop up, because we both know, Josh, there's somewhere between a 50 and 70% effective tax rate at the federal level because of 280E. No matter, I've seen every intricate structure I think you could ever put on the planet when it comes to this industry, on trying to get around it. But the bottom line is it's still there and it's a factor. I think that it will make the medical industry a lot more appealable, and it will also drive pricing at the medical level also, that it will probably increase some of the pricing because it will require more of a pharmaceutical grade product than what's currently being done. Then you throw in the FDA and all the other fun stuff that would come with that. I think it could be a wonderful thing for the industry, but careful what you wish for.
Okay. What's the likelihood on that? You got a crystal ball, like I know you do, and you're looking at that thing and you're seeing what the future holds for the industry. Is Schedule 3 going to happen? Is it not? What does your crystal ball say about the future of cannabis, especially in light of rescheduling?
Well, I think we can go back to the DEA. The DEA is not going to move fast. We all know that. And I think we can use a hypothesis or a premise of how slow they were to accept applications to get medical grade cannabis from somewhere besides Ole Miss. And, and it literally took Congress to actually intervene there, members of Congress, I should say, to tell the DA, hey, you've got to start allowing these people. But I mean, that was what, 3-4 years that they sat on applications. So based on that premise, I don't think the DEA is going to be in a hurry to deschedule. And once again, I shouldn't say once again, my premise is also there are so many other federal agencies that will have to be part of that. If the DEA decides that, that's great. But then again, how long will it take those regulators to agree on the rules? How long before we can enforce it? What are the time sequences behind that? So I think it opens up another prism of ideas and thoughts that we have to have on going around it now being a actually medically approved drug as a Schedule 3.
Mm-hmm.
Now, legalization, I would prefer legalization. Always have, always will. But that's going to be Congress acting, and with world events today, obviously that's not at the top of the list of anybody at this point. And I don't think it's been at the top of the list of very many people to begin with. because we're 3 years into this administration that said they were going to do something. I think before that we had the Obama administration. Trump, we'll just leave those 8 years out, those 4 years out of the way. But I think we've had literally 11 years of somebody saying we're going to do something with the right mix in the House, in the Senate, and we still haven't done it, Josh. So I'm less sure of legalization than I am descheduling, because I think descheduling will come first.
Yeah, it'll be interesting. I think if they were to deschedule, it would be huge, and bring a lot of revenue in. But knowing the way the government operates and how lobbyists are in control of both parties, it's probably going to go Schedule 3, and Big Pharma is going to get it, and everyone else holding onto a license is screwed. So 97.5% of the industry is going to get wiped out. That's my guess. I hope I'm wrong, but that is my crystal ball. Where can they find you at, Michael, if anybody's got any more questions about banking, about BSA, AML, or any other acronym? Where can they get a hold of you at?
The easiest way is to look me up on LinkedIn under The Cannabis Banker. It's the moniker that I've chosen because I was one of the original pioneers and architects of banking cannabis back in 2014. So that's where I am right now. I'm actually serving a timeout right now on a non-compete. So I'm happy to give people free advice, because I could not be compensated for my work for a year. So there you go. There's a free way. I'm willing to do everything for free at this point. So
well, I will definitely put your information in the show notes if anyone wants to get a hold of Michael. In the meantime, while it's free, take it while it lasts. But with that, I think we're gonna have to roll this one up. So again, I want to thank my guest, Michael O'Neill, the Cannabis Banker. That we're gonna have to roll this one up. I'm Josh Kincaid. This is the Talking Hedge. Don't forget to like, share, and subscribe, or don't, and I'm out. Don't forget to smash that like button on your way out, and check out these other videos that we've got.